Every day we hear the same story. Institutions are buying XRP, new partnerships are announced, major financial firms continue exploring blockchain technology, and reports keep suggesting that institutional interest is growing. But if all of that is true, then why has XRP struggled for so much of this year? Why does the price continue moving lower while the headlines keep getting more bullish? That's the question thousands of XRP holders are asking. And today we're going to separate facts from hype by looking at what actually moves XRP's price. One of the biggest mistakes investors make is assuming that good news should immediately lead to a higher price. It sounds logical. If institutions are buying, demand should increase and the price should rise. But financial markets rarely work that simply, especially when large institutions are involved. Here's something most people never think about. When you or I buy XRP, we usually purchase it from a public exchange where everyone can see the price moving in real time, but institutions often operate very differently. Large transactions are frequently handled through over-the-counter markets, private liquidity providers, or negotiated trades designed to minimize their impact on the public market. Their goal isn't to create excitement or move the price. Their goal is to acquire assets as efficiently as possible. That's why many investors become confused. They hear about institutional activity and immediately expect a huge green candle on the chart. When that doesn't happen, they assume the news was fake or that institutions never bought anything at all. But those aren't the only possibilities. At the same time, institutions may be accumulating. Another force can be pushing the market in the opposite direction. Retail investors. This year has been emotionally exhausting for many XRP holders. We've seen constant discussions about regulations, ETFs, partnerships, and adoption. Yet the price hasn't reflected what many expected. After months of waiting, some investors lose patience. Others begin doubting their investment. Some decide to sell simply because they're tired of waiting. And when enough retail investors start selling, that creates downward pressure on the public exchanges where price discovery happens every single day. This explains why headlines and price don't always move together. Institutional activity can be increasing in one part of the market while retail sentiment weakens somewhere else. That's why looking only at the daily chart doesn't always tell the full story. Another thing worth remembering is that institutions and retail investors don't think the same way. Retail often asks, what will happen this week? Institutions ask, what could this asset look like over the next 5 or even 10 years? Those are two completely different time horizons. And once you understand that difference, XRP's recent price action starts making a lot more sense. So if institutions aren't necessarily moving the price every single day, who is? The answer is much more interesting than most people realize. The public market. The exchanges where millions of retail investors buy and sell XRP every day is still responsible for most of the visible price discovery. That's the chart everyone watches. When fear spreads across retail investors, prices can fall even while long-term institutional interest continues building behind the scenes. And that's exactly why so many people feel confused. They see headlines saying Ripple is expanding globally. They hear about institutional partnerships. They read that large investors are accumulating. Then they look at the chart, and XRP is still struggling. It feels like none of it makes sense. But here's what many people overlook. Not every buyer purchases XRP the same way, and not every seller is selling for the same reason. Retail investors are driven heavily by emotion. When prices fall, many panic. When prices rise, many chase the market. It's human nature. Institutions, on the other hand, usually work with a completely different strategy. They don't wake up one morning and decide to buy hundreds of millions of dollars worth of XRP because of one exciting headline. Their decisions involve research, compliance teams, risk management, legal reviews, and long-term planning. Accumulation often happens gradually, not all at once. That's why expecting one announcement to immediately send XRP soaring can lead to disappointment. Another point that keeps appearing in community discussions is this. If institutions are accumulating, shouldn't the price already reflect that? Not necessarily. Financial markets are influenced by many different forces at the same time. Retail selling, macroeconomic uncertainty, profit-taking, leverage getting liquidated, overall crypto market sentiment. Even if institutional demand is increasing, those factors can temporarily outweigh bullish developments in the short term. Think of it this way. Imagine filling a large reservoir with water while another pipe is draining water out at the same time. Water is still flowing in, but until the inflow becomes stronger than the outflow, the water level may continue falling. Markets behave in a very similar way. This year we've seen plenty of fear across the crypto market. Many investors have become impatient after waiting months for stronger price action. Some simply moved their money into assets they believed would perform better in the short term. That doesn't automatically mean XRP's long-term story has changed. It simply explains why price action and fundamentals don't always move together. This is also why relying only on social media headlines can be dangerous. One day you'll hear someone say institutions are buying, the next day someone else will tell you XRP is finished. Both statements often ignore the bigger picture. The reality usually sits somewhere in the middle. That's why I believe investors should spend less time reacting to every daily candle and more time asking better questions. Is Ripple still expanding its business? Are financial institutions continuing to explore blockchain-based payments? Is regulatory clarity improving in key markets around the world? Those questions tell you far more about the long-term direction than one red candle on today's chart. But that leaves us with one final question. If price doesn't always tell the whole story, how should XRP investors judge whether real progress is actually happening? So after everything we've discussed today, I think we finally answered the question that's been frustrating so many XRP holders. If institutions are buying, why is XRP still falling? Because price and adoption don't always move at the same speed. Price reflects today's emotions, adoption reflects tomorrow's direction, and those two things often move on completely different timelines. One of the biggest mistakes investors make is judging an asset only by its current price. While price is important, it doesn't always tell you what's happening underneath the surface. Some of the biggest shifts in financial markets happen long before the majority of investors notice them. Think about every major technology revolution. The companies building the infrastructure usually spend years developing products, forming partnerships, solving regulatory challenges, and expanding their networks before the market fully recognizes what they've built. Ripple appears to be following a very similar path. Instead of focusing on creating daily excitement, the company continues expanding its payment network, improving enterprise solutions, working with financial institutions, and operating in regions where regulatory clarity already exists. Does that guarantee XRP will suddenly explode in price? No escritas. And anyone who promises you a specific price or a guaranteed timeline is pretending to know something nobody actually knows. Markets don't work that way. At the same time, assuming XRP has failed simply because the price has struggled also ignores a lot of important facts. The truth is usually somewhere in the middle. That's why I believe investors should stop asking only one question: what is XRP's price today? Instead, start asking questions that actually matter. Is Ripple continuing to grow its business? Are more institutions exploring blockchain-based payments? Is regulatory clarity improving around the world? Is the technology solving real problems? Those are the questions that help you understand whether the long-term thesis is becoming stronger or weaker, because if those answers continue moving in the right direction, today's price may not tell the entire story. Whether you're bullish or bearish on XRP, one thing is certain: the market will eventually decide based on real adoption, real utility, and real demand, not social media hype or unrealistic predictions. That's why it's important to stay patient, continue learning, and make decisions based on facts rather than emotions. So let me leave you with one final question. If institutions continue building while retail investors keep selling, who do you think has the better chance of being right 5 years from now? I'd genuinely love to hear your thoughts, so leave your opinion in the comments below. If you enjoyed this breakdown and want XRP videos that answer the questions the community is actually asking, instead of chasing hype and unrealistic price predictions, make sure to like this video, subscribe to OG John, XRP Insights, and turn on notifications so you never miss our next XRP analysis. Thank you for watching, and I'll see you in the next video.